Welcome to the channel, guys. This is primarily going to be a quick overview on stock that fundamentally good in the Indian context and that can be invested for long term. This stock list is for beginners and for the long term. But yes, I reiterate, in the new in the market, the first way should be index ETFs, index mutual fund, and the mutual fund. And once you have a bit of knowledge in the ratio, return on equity, return on capital, interest coverage ratio, credit ratio, quick ratio, and then of course sales growth and all those, plus the fundamental part. Okay. Maybe a bit on technical on the decision support, and that's where you should be confident getting into any, because anybody can give their lesson. You don't have to blindly follow that. What I'll do, we'll go through the list, and then you can go into the already there are a lot of websites, but I'll choose few so you can go do a research. Before you do that, it's your hard-earned money, right? Make sure why you are investing. If certain anyone, right, they're putting because of their research. Do I have to? For example, let's pick Hindustan Unilever. That's my first stock. But do you really believe in Hindustan Unilever? Does the past trend determine the future? Maybe not. You can just skip it. I'm not interested. But in case, that's largely I wanted to know. Just make you understand stocks for long term. And if you understand all those metrics associated with a certain stock, understand the riskiness, then yes, please go ahead and watch the video. That's the first Hindustan Unilever. How do we just go and research it? What we'll do now, go into screen area, one of the prominent, and go to trend line, look at few other, even they have wonderful, or maybe ticker tape, whatever But by default, normally I go to go here, right? So long term, you should not be a lot of bother, but what you can do, I'll show for one stock, and then of course for the rest stock you can do the same. So it's screener, right? This is a market cap, right? Number of shares into the current price, that's a 24. That's a market cap. And why market cap? Because that's how our analysts put that large cap, small cap, and mid cap. You can just read about the large cap, mid cap is called or small cap based on market cap. So look at that filter, but that's irrelevant here. That's Unilever, well-known name, a lot of consumer goods. You want, you can just open that, look at the product they have. So Pepsodent closure I use, and then Lakme, Job Live, but it's a well-known name. One thing, do you know that there are certain products they make it, and a certain product they just market it. So you can look at those. Now with that, we quickly get into the pros and cons. May not be relevant initially, but what you want to look at, return on asset. We compare the peers. They have a better. Why they have a better? For example, Colgate Palmolive. Yeah. So it's quite possible. I mean, you go through and then realize maybe Colgate Palmolive looks better than it, and you're convinced. Go ahead and buy Colgate. Absolutely fine. Yeah, I picked up this one. You don't have to, but yes, you need to understand why you're buying it. Okay, return on capital. It's only 24. But this says, greater. Why I'm not choosing these two? Okay, is there anything that you can look at here and differentiate? Maybe not. How do we differentiate across peers? So what you look at, the best bet would be you just look at this part table here: compounded sales growth, profit growth, CAGR, and return on equity. That's one way to look at it. Similarly, so just for example, I'll pick Colgate Palmolive, and we should understand price to earning, right? Price to earning is only 38. This is cheaper. If you understand PE concept, it's cheaper. But why is cheaper? It's quoting a 60. This quoting a 90. But I'm saying in the Sunliver, why not this one? It's expensive. Why not this one? So we have to understand. Look at this chart. What did you say? Sales growth. Do you remember the previous number? Maybe not. Just keep in mind 7552. Yeah? Stock price CAGR, even that's not reflecting. That's basically movement of your stock price. Yeah? Profit growth, TTM 1%, 9, 13, 13. Okay, Go to Hindustan Lever again. Just see what's the number there. Yeah, 7552. You're getting me, right? Again, go to profit growth. Look at this number. Yeah, CAGR. Look at CAGR. Return equity. Yes, it's beating on recorded equity, but it depends. Which is you're looking at. Now coming back to the Hindustan Lever, what do you want? What else do you want to look at? If people, consider promoted percentage as a significant, normally it's got to greater than, I won't have a cutoff exact, but normally it's greater than 60%. People say management is confident enough of the future growth of the company. That's how people look at. Yes, you can explore on these ones. Graham number 44. What is Graham number? How do you cut 22 into the formula? Look at that. Is it greater than? Yes. What is Graham number of the stock? That's one way to look at stock on the fundamentally. But fundamental perspective, the one thing you remember is your credit ratio. These all are well-known companies. So all would by default should have more than one current ratio. Yes, looking in 1 year time horizon, whatever liability they have to, let's say they have to pay off now, they have. So what they look at 1 year liability, they look at 1 year asset plus the cash reserve that you have. Do you have enough cash to meet 1 year liability down the line? Of course, you're looking from the calculation now, right? Now, looking at that window of 1 year, do you believe the company can pay off the liability that you have for 1 year? What could be liability, right? Hindustan Lever buying maybe making a product. In that case, you buy the raw good from the market. Okay, coming to the one more thing that you want to have a look is this a data days, right? So Hindustan Lever, right? They get the money from whomever they sell it in 16 days. Okay, as of March 22. But days payable, this number, right? Whatever raw good they have bought, they have to pay back to those seller after 140. That's a healthy to have. Okay? And normally within from inventory, when they have make a product that could be selling in 65 days is already shipped and sell into market. Why is it negative? They have a money before that. This is called cash conversion cycle. They buy a raw good, yeah, paying a money after 145 days, yeah. They're getting money back only in 16 days. Only inventory 65 days. Hence, a negative is always good. The negative means they have a, in a way, they're getting money, yeah, before even product is sold. Just to look at that from the cash conversion, it's not actually that way. You get because they have not paid the raw material money for 145 days, right? But they have already sold that product in 16 days. So they have got a cash, and now we have to pay after how many days? 16 plus 65 days, yeah. That money, is lying with them, right? I hope this clear. So something you want to look at this cash conversion cycle, yeah. And with that, I think largely this would be the. Then what will be the next we look at? You also now, since you have identified a stock that you believe would be bought, okay, you can do the same thing for other stock. Hindustan Unilever. Now, technically, this right, you need to understand what is candlestick pattern. There are doji candle, how do it signal. So this one you look at. If you just go and read about technical, this chart at the when it forms at the top, it indicates more of a downturn. It's not exactly as such, but I'm just giving a relevant. Similarly, we look at this one and then this one, right? This one. What do you understand? If from the top, it's the red is a down. Is selling is started here. Big selling. And then here it's from the down started up. Again, look at this position. Yeah? Not exactly as true candles pattern that I am, but I'm just trying to went up. Then again, look at this pattern. Down and then up. This is a monthly one. So what are you going to do? You can look at daily, weekly for the time horizon, and of course there are other indicators that you believe in. So why we are here? We have identified a stock that's fundamentally good. Look at this positive sign. So buyer and seller are fighting very hard at this position. Look at that. Completely a plus sign, right sign somewhere, right? When this appears, so people started and it started at open and then it goes up. The seller push them down, again down, then again buyer push them up. That's where there is decision being. If that's the case, it can go either way, up or down. Do you want to buy here? The question here would technically, initially, technically, a lot of metrics and chart. Do you want to buy here or maybe here? Do you want to buy this point of time or maybe this? You cannot time the market, but just to you want to buy here or maybe here. This sort of chart you can just read it out. So in a way, you are trying to maximize your gain. Nobody can just find the bottom and the good stock with the less P, but that's how you're gonna do that. With that, now we get back again to the second stock. So here, that was the first stock that we had. Now would be the second stock. It's this Asian Paint. Asian Paint. So in this segment, we have Asian Paints and then we have Berger. It's closely fighting very ways. Why Asian Paint? They're known for the inventory. So they are the one who initially started that analytics part. And that's a wonderful to notice here. They are the one who they figure it out what sort of color or product they do that intelligence part on research and they make it ready, right? That area requires that's level of analysis they do, and hence they are the leader. Asian Paint, right? They also started getting into some home renovations part. I just read it there. So one of the fundamentally good stock. Buying stock, you have to look at both perspectives, not only the return. Don't change the return. If it's a good stock, it's a good company, it is bound to give you the return. Okay? And yes, if you buy it, hold for some time. Don't panic. And of course, you can do the research the way I just shown you, even for this one. Next would be About India. It's a wonderful company. So we have few foreign MNCs already. We have About, we have Pfizer, we have Glaxo, and from the Indian country we have Cipla, we have Sun Pharma. But About is normally known for the excellent research they do, and it's also a market leader in New York, USA. Hence, somehow it's outside the other ones. Okay, but an Expedilite, well-known name, right? In some way, it has a moat on some sort of monopoly. Probably Pidilite, all those products. And if you have been part of right home renovation, you understand how Pidilite is crucial, right? So yes, the name suggests, and you can just whatever details you need, you can just do a research a bit more. Next is Titan. It's a wonderful company. They have also started the clothing apart from the jewelry. Of course, here a bit of would be the problem of the gold fluctuation rates. So you might have to look at the gold raw prices before getting into. And if you're concerned, of course, you can skip this stock for sure. But if you believe that it's a good company, you can. Next would be Divi's Laboratories, right, in the API market. So again, this is a wonderful company. They're performing, they have again, in certain segment they're a leader, and it's a wonderful company to have in your portfolio. Next would be the last one. I intentionally pulled all these stocks. These all are good stock, right? All honestly, it has a monopoly in baby feed, PI industry, wonderful agro. Then HDFC Bank, well known. HDFC Bank, and now people are also looking at Kotak and ICICI too. So if you believe, Kotak, it looks to be better bet, or maybe ICICI, of course you go ahead with that. TCS, Infosys, the two IT giants, right? Both are wonderful company, and so you can hope you join some sort of guidance in terms of fundamental, technical, and how you can go about it. With that, I'm wrapping up this presentation. Thank you for being here.